Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So it is Thursday, and what a day. You know, we've been waiting for this ECB meeting. A lot of people have been talking about how it might be priced in, and you know what, it could have been, considering the size of the move that Europe had prior to the ECB meeting, you know, besides some of the action we've seen in a lot of our indices. And then all of a sudden, 8:30 came out, and he kind of overwhelmed versus underwhelmed. And we talked about it. We talked about how the street was looking for 600 to 700 billion. We were focusing on 1 year versus 2 years, and not only did they do 50 billion a month, they went 60 billion a month, and they went to September 2016, and you know, Europe closed up at 7-year highs plus in some indices, and up 1.4%, and then our markets, you know, slowly built throughout the course of the day. And at least it was a little different. I know I came in with I think 5 longs and a short. First move was down. They tried to sell it off. And you know, if you got stopped out of some positions, okay, because I sold a lot of my positions into some of the strength, regrouped, and then I was like, okay, let me see what's next, because the market had to prove that it was going to hold in there. And then little by little, you know, there were spots where you saw high beta tech was involved, the banks were getting their bounce, oil was a little bit lower, but the market didn't care, and PS. We now have pretty much broken the right side of that head and shoulders pattern, and that wedge that had a bunch of lower highs that now resolved to the upside. So if you were short and thinking we're going to make new January lows, you know, you're coming in today and you stayed short, then you have a thesis, and then you could roll them up, and who knows, maybe you might be right. But if you're an active trader, technically, you know, today was your day to say, you know what, I need to cover now because I might be wrong, and then figure out what's next. So anyway, you look at the chart of the SPX. Here is the chart, okay? We've been, every single day I analyze this for everybody, and I try and give everyone a little bit of an edge on levels and how to trade them. This was when it seemed as if we might break to the downside of this overall wedge. And what happened on Friday? You had that red dog reversal. What is a red dog reversal? After a move from 2064 down to here, that low, you write that low down, 1891. Okay, what is that? 70 handles. People use this level as an area for a stop. What happened on Friday? It went below it by 3 handles, came back above it, and that was your long. We talked about the red dog reversal. Some people get very long here, they sell some and hold a third, and then say, I'm going to hold this as a swing trade as long as it doesn't break this. And if you did that, you're in really, really healthy gains. You know, if you trade actively, you might not just be sitting in it, you're probably trading some size back and forth. But anyway, you know, that was then, this is now. Then all of a sudden you had this area we talked about, this first of all you had yesterday's high, which was an area for adjustments, 2038. Above it, you're long, below it, you're short. Went below it for pretty much, 20 minutes, came back above it, and then, didn't stop rallying thereafter. It actually took out the 8 and the 21 day again. Let me just get rid of this line because I just drew another one so you don't see the noise there. And now all of a sudden it's right at this 2064-ish level, which might be a little resistance. You never know. We're now a little bit overbought, but overall, really, really nice move. Okay, now here's where those highs are. Let's go around the board looking at sectors, the Qs. Also, if you were short versus this trend line, you had to cover. Okay, and here was that red dog reversal right there. Look at that. It went below 99.52 to as low as 99.38, so 14 cents was your risk. If you got rid of your on the failure here and said, I'm going to try and buy some support, I don't know where it's going to go, but I'll get in here, use 14 cents as my out. Look at the size of that 4-day move. And sometimes for us, it's not realistic to just truly do that. Some people do it because they're not an active trader and they're not a professional prop guy that's in front of the computer all day long. They just say, okay, at extreme points, I'm going to put this swing trade on and let it beat me. And if that's you, great. Then you're adding cash flow to your career, whether you're a doctor, a lawyer, or policeman, or fireman, whatever it is. If you're a swing trader and active trader, you have 2 accounts. Maybe you're in it and trading the other account, or you're just trying to maneuver the levels. And if that's the case, great too. Everyone has their system. You look back here. Again, this was your area, this 102.61. I write down, pivots every morning around 5 o'clock. I tweet them out, and these are things to write down. We go over them in the morning call. We go over them in Morning Call Express, and boom, above this trend is now broken. Does it mean that we go off to the races and make new highs within the next week? I don't know. would it be good to hold above this now and go sideways for a little bit? Yes. Can we get some follow through tomorrow? Possibly. But at any point, if you're just holding this short because you're like, oh, this is going to be a feeble bounce, it proved it wasn't a feeble bounce even when it took this out, which was 101.60. So you could always save yourself some money. The IWMs, which have not been leading, but today woke up. What did it do? It held this big support going sideways and now cleared this area. So if you were looking for a breakdown of 114.83, you make some adjustments, and then you see what's next. IBBs, which were weak for the past 2 days, reversed, held the 21-day, which has been holding for the majority of the time, still looks okay. The XLF, which was very oversold, okay, gave you a nice bounce. We talked about playing this for a bounce, whether it was Bank of America or today I tweeted that Morgan Stanley, could play some catch up because a lot of these things were breaking this lower pivot. Well, big move. There's probably some room left, but I wouldn't expect that much considering the size of today's move. But it definitely wasn't feeble. If it was feeble, it would have been blocked right here at prior support that sometimes turns into resistance. Was it resistance? No. So, this could have been your spot to cover and or even get long. So, those are some of the sectors. As far as the stocks, yesterday Netflix came out, or the day before, earnings after the close. They opened it up. The gap held the majority of it, and that's when we talked about high beta tech changing. Some momentum coming back, which is great for trading, especially if you trade actively, because things that move, we like to tend to be a little bit more long than short them. So when they go to the upside, there's nice moves to be made there. My morning note today went over all the levels of if we got through this, then it can go there. Hopefully you subscribe to the Redler All Access. My note is written every day, taking everything into account of what happened overnight, where the features are in the morning, and then I go over about 30 names of which are all the stocks in my arsenal that I trade. So anyway, let's just start with Apple. Apple, nice trade today, right back up to resistance. If you're a swing trader and you want to be long and wait till earnings, okay. This is when I got in it. I was in it overnight, sold it basically, and I think you can hold it, but into this little resistance spot, it'd be better for a little bit of a rest. Not that compelling. BABA also. I actually made money short this off the open. Yeah, if you're on the VTF, you get to see that. I'm not going to tweet that I was shorted for $1, big deal, but that's active cash flow. Here's the really nice trending trade, and now it's kind of poking its head right here. If it can go sideways for a day or so, I think that will get a nice blast off through this area of 105, and it can continue. I think overall, in my my thesis I wrote for 2015, I said this is not the historic high, but it had to go through a consolidation period, and look where it came from this red dog reversal. Nice move, nice active trade, and now holding a little bit in here would be great for a continuation. Google woke up yesterday and broke this downtrend. Look at all these different levels here. When the market was coming in, it was showing a little relative strength. This was a pivot that broke above, and then now another. Do you need to stay long Google? It's a broken stock that's trying to come back. You go across here, this would be some resistance. So maybe if you were long it here, you sold some on the close. If you held some, okay. It still has some room to the 200-day. This trend now is broken. This morning, a lot of guys actually said, I think Amazon's rallying. It doesn't matter what Icon did or not did. But PS, it was strong and it played a little catch up. Still a broken name, but entries and exits matter. And if you got involved when it broke this small trend line here, okay, you're in it, and now we'll see how it handles this little pivot and then how it handles this. But overall, nice cash flow trade. Still broken. See, a lot of these stocks, everyone feels like we just had a huge rally, but these things have not done much. So there's still room to play the individual stock game as maybe markets digest now and other things tend to go. Let's look at Baidu. What is it doing? Still, none of these things are even back at highs yet. So we'll see what happens next. This, woke up yesterday, was lower today, held in there, closed strong. Still has some room. So, okay. As far as the banks, I came in long Bank of America and I kind of messed up the trade. Big move here. I went, I saw a lot of these things starting to clear these lower pivots from here. Okay, by the way, look at Goldman after yesterday's Red Dog reversal. Red Dog reversal, follow through. Here it was. If you bought it on this day, when it broke below 174.23 after coming in about $20. That was your buy signal. Okay, did you see this kind of buy signal anywhere else? No. Here it looked a little bit like one, but it was more of a doji. And this was your break below the low, come back up, and then today cleared this, took back the 200-day, and chances are you probably see this very soon. But nice day-and-a-half trade. You could find day-and-a-half trades that could pay your bills as an active trader by using different tactics. You not only have to trade breakouts into 52-week highs, you could trade lower level RDRs and then trail them. Some go for 2 days, some go for 4 or 5, some are just a day and a half, some fail the next day, but hopefully you're only holding a third, and then you get to see what the action is next. This is the one I went with, and I'm still long as Morgan. Morgan was the last to report, so it still had some people hitting it. I think I tweeted at some point right around here, I'm like, I think Morgan could see 35.50 within the next few days, and it wound up happening today. So if you took it, great. I felt like a gap fill could happen, and it did, and now it seems like this probably is next. This is a different pattern. It couldn't make a new low. It held above the 200-day, so this actually should be stronger than some of the other banks. We'll see if it plays catch up. Let's see what else went on. Tesla, had a little bit more of a push. Still, Dow's up 270 points. Everyone's rip-roaring and celebrating, and meanwhile, these things still have just been small little trash for treasures trades. This filled the gap, but again, this is the type of move that you could acknowledge when it holds that news low, goes sideways, fills the gap. That right there is how you could make money trading. Trading ends of the ranges, not just breakouts. We're not just breakout momentum traders. We have many different tactics to use in order to find cash flow in different areas of the market. Oil did not have a strong day today. Didn't fall apart, but still hung in there. But something interesting was, look at the XLE. XLE closed on the highs again as oil was weak, right from this red dog reversal here. Okay, that price point was 72.88, and now look at it, still on the move. I'm not in it. I sold it yesterday, but held my RSX. Look at that. That was up, I think, 5% today. 2% yesterday. That's 7%. Not bad. I did not try buying it during this entire downtrend. This one blood in the street day, we played it, and then we said, okay, now it looks like it's poised. And today, it gapped up above this consolidation, held close strong. So my humble opinion, I think it fills this gap and gets to 17, and that would be the trade for me. And then it could go higher, who knows, but at this point was tight, never made new lows when oil did, and at this point, perhaps a little bit left in the tank. You don't have to choose and be in 12 stocks in order to make money. You pick the pattern you like, that you're comfortable with, take the size that could make you money and you're not scared and going back and forth and just trading your P&L, and you go with it. Today I was only in 3-4 things and still had probably one of my best days of the year because I was focused on what I was doing and I wasn't scattered and selling things on a pullback and buying things higher, and it just you do what you could do. And I know it would have been nice to sit in Google and Amazon and Apple and this and that all day long, but once you get out, sometimes it's hard to get in. And if you make money and you're out of the way, you know what? It's fine. You don't go broke by ringing the cash register. So if you pick something else, there was definitely a nice move here in the spiders in the second part of the day. I know I was out of the office on the road, which I had to be, and this was the movement. I saw it going sideways here. I left. I was not in the spiders. I wound up calling up the trade desk, bought the spiders right here. Okay, right around this 204.50. That's when people on the VTF saw it. I was only sitting in Russia and Morgan at this point. After trading this, scenario here, and then boom, another nice trade into the close. So all you have to do is find that pattern. Nice move, sideways consolidation, didn't fall apart, and then broke out above it, and then wound up, closing above 206. You could probably look at a lot of different intraday patterns and figure out the same. They had a move, went sideways, went again. I think Google did it too. Google, had its first, had a wedge type move on the 5-minute. Went, sat all day long, and then gave you a second trade. This is the way trading used to be. You used to be able to, trade an opening range, 30-minute flag for a breakout. And if you did that from 526, you saw 7 points. Then it needs to rest all day long. gets followed through into the close. I remember those days. Do you remember those days? They were nice versus the days of the computer where, some highs of the day are put in at 1 o'clock and then, and then by the close it's 50 cents below the highs, never makes a new high, and then gaps up above that high the next day. That was like last year's trading. But anyway, not saying this is the way it's going to be moving forward, but today was one of those days, and hopefully you capitalized on it. I think a lot of guys on the site were, very bullish. I'm not going to start calling out names, but you guys were, doing well. I don't think anyone was head short on the brain, and no one was fighting the move. Most people were just looking for good long ideas and good setups, and that's what the community is about. It's about finding the good setups, supporting each other, and making forward progress. Not blaring opinions at people if they don't agree. Just throw something out on the VTF in the chat that has over 350 plus people, and if you like it, you go with the idea. If it's your idea also, you get more conviction, maybe you do more size, then all of a sudden you're making more money and the community is helping you. And if you happen to be the lone wolf out there with your own idea and no one agrees with you, so you might be right too, and then you might be giving that little dose of skepticism to people that might be a little blinded. But anyway, it is what it is. At this point, Draghi's out of the way. He, I think, over-delivered, and that's what we mentioned earlier, even in the charts. I'm like, Draghi came, over-delivered. It's going to be hard for them to sell this off. Not sure if we blast to new highs, but let's look for long setups and rotate through them. I think at this point, what just happened in the markets, we'll be able to find the different setups in the different sectors, and and keep some kind of portfolio approach where you could have some longs, some hedges, and go back and forth, and keep figuring it out. Let's see what gold do today. Gold on the daily held in there. Look at that. Gold held in there even with the market strong. What did the TLTs do? TLTs closed below a prior day low. You haven't seen that in a while. Below the 8-day, but still above the 21-day. And who knows, maybe it comes in a little bit and holds there. It did it here, and it did it here. So this trend is still strong. You can be up a lot of money in it, but no reason why you can't navigate it like on this blow-off top day. If you sold some strength, you didn't have to sit through this monotony until it started to go again. So if you got out on yesterday's outside day, you know what, you still aren't seeing a signal to buy back yet. It's now below the 8-day, which it's been above during this entire trend. And here's where the 21-day is, and that's probably a spot to look at if it sees that. So first, to get there, you have to go through today's low. So we'll see what happens. It is Friday. It's been a heck of a week. It's been a very volatile January. You're going to see the headlines that S&P is now flat on year. So any money manager that said, I'm going to wait because that 3% correction in January or that 4% move off the highs could be 7 or 8, now they're thinking, ooh, I don't want to underperform the way I underperformed last year by being too conservative. So at this point, market's flat on year. If it starts going higher, these guys are going to have to start putting money to work because the action is warranting it. I was talking to a few friends at lunch today. I'm like, they're just doing QE in Europe. 50 billion in purchases, whatever those purchases are, for the next almost 2 years with the market near 7-year highs. So that means they're never really going to have a big pull-in. Same way the last 2 years, we've only had a 4% pull-in or so. So, you have to be quick on your feet. You have to be making moves. If you're looking for shorts, make sure you're cute. And it's not going to be the same here. We don't have the pace of purchase. So there's a little less buying pressure here, a little less money flows. So you're going to have to be that much more selective on what you're choosing, where you're going, and keep taking those trades. At this point, downtrend broken, intermediate resistance gone. We'll see if we hold above it and continue. But at this point, if you were playing for a support break, it didn't happen. Trade real time, make some decisions, make some adjustments to your process, and see what's next. I'm not saying we're off to the races, new highs, all-time highs, but today was one of those days where they tried to sell it off. We broke a trend line, and whenever you break a trend line, you make adjustments. You can always go back to it. Have a great night. I'll see you tomorrow. It's Thursday. Have some fun.